the best thing that could happen to Bitcoin is the volatility decreases a bit, but the correlations break down, because if it's an uncorrelated asset and it's a legitimate asset, then most of the financial world is underexposed, right? You've got $500 trillion of liquid financial assets floating around, and 0.1% of that is Bitcoin. So if it gets to be 1%, right, 2%, then it's going up by a factor of 10 or more.
Michael Saylor, the executive chairman of MicroStrategy, strongly believes in the immense potential of Bitcoin, the world's largest cryptocurrency, in which his company has made significant investments. Saylor predicts that Bitcoin has a clear path to reaching 10 times its current price. He asserts that when investors recognize the essential qualities of this asset and begin mass adoption, Bitcoin's share of the $500 trillion worth of liquid financial assets will increase from the current 0.1% to 1%, or even 2%. With its limited supply, such a surge in market capitalization will drive Bitcoin prices higher and make it even more appealing to investors. Saylor is confident that it's only a matter of time before more investors reach the same conclusion that MicroStrategy did in August 2020 when they made their initial $250 million Bitcoin purchase. MicroStrategy's decision to invest in Bitcoin was based on seeing it as digital gold with superior attributes and none of the drawbacks associated with precious metals. Saylor highlights Bitcoin's scarcity, instant transferability, the appeal of a large tech network, and its tangibility as key factors behind their choice. MicroStrategy's Bitcoin investment has proven to be highly successful, with Bitcoin surging over 150% since their first purchase. In contrast, other assets like silver, bonds, and gold have experienced declines. While stock indexes have performed better, Bitcoin has outperformed them significantly. Saylor's conviction in Bitcoin's potential has remained unshaken, leading MicroStrategy to continue acquiring more Bitcoin, as demonstrated by their recent multi-million-dollar purchase. In a recent interview with The Block, Michael Saylor shared his outlook and predictions for Bitcoin in the coming years.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
If we switch the focus just to the crypto industry as opposed to macroeconomics, and the last macroeconomic observation is that, interest rates did go to zero. They stayed at zero for 18 months. Then they got jacked up to 500 basis points in 12 months. It started breaking the banks. It really crimped the commercial real estate industry, the residential real estate industry. It squeezed the equity markets. And now we're kind of like at this point where it's not clear, do they creep up a little bit or the interest rates to come back in? But I think we're at the end of that aggressive tightening cycle. And at some point, they're going to have to loosen monetary policy. So we're poised there. In the crypto industry, I think in general, the question is Bitcoin going to be banned, hacked, or copied? Right? It was the biggest crypto asset 3 years ago, but will it be banned? Will it be hacked? Will it be copied? That's the question for any investor. What happens next? There used to be a lot of Bitcoin skeptics. There were, people, there were the deniers. I talk about them. People that think Bitcoin is tulip bulbs and a Ponzi scheme. Peter Schiff being the most famous. The deniers are pretty much silenced now, right? I mean, they have fallen out of consensus. Bloomberg, New York Times, Wall Street Journal, CNBC, Congress, the SEC, the CFTC, the Treasury, all the central banks of the world, they all kind of acknowledge it's not tulip bulbs. It's a real asset. It's a digital commodity. So the deniers are out of the mainstream. Then you have the skeptics, like Bitcoin is really good idea, but it's too good idea, so the government's going to ban it. And we had, Jamie Dimon said it, you've got other people that said it, Larry Fink once said, it's an index of money laundering. So the skeptics held the day for a while. But I think in the last 24 to 36 months, the skeptics have kind of fallen out of the mainstream as well, because you can't with a straight face go on CNBC and say Bitcoin's going to be banned when they've got the ticker in the lower right corner, and they've got the head of the SEC, the head of the CFTC, and the Secretary of the Treasury, and then Jerome Powell all saying, I think it's going to be around for a while. It's a real thing. So the skeptics don't really have much power. So now if it's an asset, you've got a bunch of investors and, maybe you love it, maybe you hate it. You're like, if you're an investor, You acknowledge it as an asset class, and you can either go long, go short, or trade the volatility. I think that you've seen a lot more investors coming into this space, and for a while they thought it was correlated to risk assets, and so they would short it to hedge their risk portfolio, right? And then they thought it was not correlated or negatively correlated, and so that view has evolved over time. But to your point, the best thing that could happen to Bitcoin is the volatility decreases a bit, but the correlations break down, because if it's an uncorrelated asset and it's a legitimate asset, then most of the financial world is underexposed, right? You've got $500 trillion of liquid financial assets floating around, and 0.1% of that is Bitcoin. So if it gets to be 1%, right, 2%, then it's going up by a factor of 10 or more.
According to Saylor, there is a particular group of investors who have yet to fully embrace Bitcoin, technocrats. These are tech-savvy investors who believe in utilizing technology and its applications to address various global issues. Currently, they are heavily invested in companies like Apple, Microsoft, and Google, 3 of the world's largest companies by market valuation. The main factor keeping them from Bitcoin, as Saylor explains, is the cryptocurrency industry's high volatility. However, he predicts that Bitcoin's volatility will decrease as it gains more popularity and widespread acceptance. Here are additional clips from the interview for further insights.
I think we'll get the uncorrelated, and how much volatility we get, it's unclear. But as more people adopt it, and as liquidity increases in the mainstream institutional investor market, I think the volatility will decrease and is decreasing. I mean, the last 2 investor classes are the technocrats. And this is a set of investors you want. They're the people that think Apple and Google and Amazon and Facebook and Microsoft are really powerful networks. And you can see the big winning stock ideas have been Microsoft, Apple, and Google. And the reason why is because they're more powerful than most nation states. It should be pretty clear to people right now that Apple has 1 billion users, and it would be easier for you to leave the United States of America and pick up your life elsewhere than it would be for you to leave the Apple ecosystem. And it's a very interesting idea, but if you're a tech investor, you could get behind that idea, and eventually just about everybody that got insanely wealthy over the past 20 or 30 years was a technocrat, really, if you think about it. And then eventually you get the Warren Buffetts and you get the Carl Icahns of the world that say, I don't know if I understand it, but it seems like a juggernaut, so I guess I'll buy $10 billion of it. And Warren Buffett made more money on Apple stock than he made in his entire life on everything else you've ever heard of. And he made that money faster. And so the technocrat, kind of wins over the mainstream investor. And Bitcoin is emerging as this dominant digital monetary network, or dominant digital commodity network, or you could call it dominant digital property network. The thing that's most controversial is currency. Currency is very controversial. Every nation state wants to control their own currency. Currency is a medium of exchange, and you could say it's a system of control, right? A medium of exchange, a unit of account, a store of value. But the fourth thing, the system of control, turns out to be really, really important. So digital currency networks are very controversial, and there's a lot of uncertainty. But on the other hand, owning property is not controversial. And if Bitcoin is digital gold, then there is no nation of gold with subpoena power that's going to attack you for taking away its monetary premium. And the same is true if Bitcoin is better investment than real estate. Well, Congress and the Treasury and the FBI and FinCEN, they're not gonna take a lot of issue with the fact that you actually demonetize some commercial real estate by 2%. So Bitcoin is emerging as this digital property network, and it meets the use case of store of value. And all of the endorsements have made a huge difference. I mean, you've got 4 presidential candidates that have come out pro-Bitcoin. That's kind of like a chicken in every pot, and everybody deserves their own home. And if everyone has an entitlement to own their own home, and I'm going to launch Freddie Mac and Fannie Mae, and I'm going to make home mortgages cheap because every American deserves to own a home, what you get is a lot of money flowing into that asset class, the entire mortgage-backed security asset and real estate. And there's a reason real estate's gone up 7% a year in all these cities for the last 100 years. Right? Because it's a supported asset class. I think that Bitcoin is emerging as a supported asset class. If you've got the regulators endorsing it, Congress endorsing it, legislators endorsing it, you've got candidates endorsing it, then I think you've turned a corner. So I think we've turned a corner where you're either going to be an investor or a technocrat, or the last is maximalist. And
similar to Michael Saylor, billionaire investor Tim Draper is also a prominent Bitcoin enthusiast and longtime bull. Draper recently reaffirmed his previous prediction that Bitcoin would reach $250,000 per coin. However, he has adjusted his timeline, moving it forward by 2 years. In a tweet, Draper acknowledges that he missed the timeline for Bitcoin hitting $250,000 but remains confident that the top cryptocurrency is still on track to reach his price target. He humorously mentions his predictive abilities and states that although the journey may take a bit longer, engineers are diligently working on Bitcoin's development. Both Saylor and Draper, two brilliant billionaire investors, foresee significant price gains for Bitcoin. However, it is crucial to consider the current macroeconomic and regulatory landscape when evaluating the practicality of their predictions. Feel free to share your thoughts and observations on their predictions in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.